Every beginner trader needs to hear this, and it's that 99% of trading concepts do not work. They do not work, and they're a complete waste of time. And it took me 4 years before I finally made my first penny from trading, all because I was learning pointless stuff from people who had no idea what they were talking about and added years onto my journey. And I honestly could have done it in 4 months, and probably even 4 weeks with the right knowledge. It's that insane, and I really want to save you guys the pain. So in this video, I'll teach you what actually works and how easy it is to become a profitable trader. So let's get on to the chart. Okay, so here we are in gold, and I've chosen gold because I think it's the most popular market. I don't know, it might be this and the S&P, but this concept right here of liquidity, which is the most important thing and the only thing you actually need in trading, it works on all markets, right? Every single financial market possible. So the S&P, indices, futures, stocks, options, forex, commodities, and crypto, even penny stocks, always on every single market imaginable. So what we need, and this is the only thing we really need, right, is if you want to be a profitable trader, is you need a direction first and foremost. You need a direction where price is likely to go, right? No one knows for sure, but where price is likely to go. And then all you need, once you've got that direction, is a simple entry pattern, right? That's all you need for trading. Everything else, apart from that, is a complete distraction. We need a direction and then a simple entry pattern, right? And let me save you guys a lot of pain, and this took me about 2 years to realize. The entry pattern is the least important thing. You can get the direction right, any entry pattern will do. And if you get the direction wrong, doesn't matter if you have the best entry pattern in the world, you're still going to lose, right? Because you're at the wrong direction. So what we need first is a direction. The direction, the most important thing by far. And in order to get a direction, we need to look at where the big boys, right? Where the, where people who actually move price, where they're actually looking at. And they're not looking at the 1 minute chart, because I said this in loads of videos, they have billions of dollars to move into these markets. They cannot get into their position on a 1 minute, 5 minute, even the hourly chart, right? The minimum they look at is the 4 hour. But the daily chart, this is what all the big banks, hedge funds, and Goldman Sachs, everybody's looking at the daily chart, right? All eyes are on the daily chart. This is the most important time frame, I guess, in all of trading, right? In terms of significance. So here we are on gold. Here we are on gold. Now, right here, we have essentially triple highs. We've got one high here, and we have a third high here. Right? We've got a third high here. So I've titled this liquidity / resistance / stop loss orders. All of these things are talking about the exact same thing. I was talking about the exact same thing. There are lots of traders actually, and I was this trader for about a year, who used to believe in support and resistance, right? They think price is going to come all the way up, it's going to bounce off this, and then go down, right? Like that. They think that that's how major financial markets move, purely based on these random lines, right? I'm going to save you lots of pain and lots of frustration. Support and resistance does not work, right? And hear me out. If you believe in support and resistance, just watch the end of this video, go into the charts, look at liquidity, look at support and resistance, and just see which one works more often than not. I guarantee you will come to the conclusion that liquidity is it. Because the moment I found out about liquidity, bam, just like that, I was profitable. Once I understood liquidity, in more depth. So here we go, right? Here we go. We've got triple highs here, right? We've got triple highs here. There are traders who think this is great resistance, right? They're going to short. They're going to put their stop loss orders at this level, thinking it's nice and safe, right? Like we said, they think it's nice and safe. They think price is going to come up and it's going to bounce again, like it did here, right? Now, I talked about this in the previous video. The only reason, now some people might be like, oh yeah, but support and resistance, it worked here, right? We've got almost 2 equal highs. Well, there's 2 things here. First of all, this isn't really resistance, or this wasn't really a respect, because this right here is something called the liquidity street. But we're not going to talk about that. We're not going to talk about that at all. What actually happens, right? What actually happens is price is given these almost 2 equal highs to engineer liquidity. Now, what that means is because, let me just zoom out actually. We've been in a bull market on gold for, almost the whole of 2024, right? And I'm recording this in essentially end of January 2025, right? So most people are looking to long in gold, right? We're in a massive bull market. Very few people are looking to short. So when price does this, when price comes up, it leaves almost relative equal highs like this, and it starts to move down. Lots of people, and by lots of people, I mean like hedge funds, are going to start to short, right? They're going to start to short, and they're going to put their stop loss orders around this level, around this resistance level, thinking it's really good, right? Now, why am I telling you stop loss orders? If there's one thing you take away from this video, and there's one thing you understand about liquidity, let it be this. Price only moves for stop loss orders on the higher time frames, right? Let me say that again. Price will only move for stop loss orders on the higher time frames, on the daily, the 4 hour chart, and the weekly chart. Now, you might be asking, why is that? Why is price moving for stop loss orders? Right? The reason is, if you've got billions of dollars, right? If you've got billions of dollars and you want to buy, billions of worth of gold, you cannot get in on the lower time frame. Now, what I mean by that is you can only get in and out of your position where there's billions of dollars worth of orders, right? If I want to buy billions of dollars worth of gold, I need someone selling billions of dollars of gold, right? That makes sense. And if I'm selling billions of dollars worth of gold, I need someone who's buying billions of dollars worth of gold. And there aren't many people who are buying and selling billions of dollars of gold. There's very few people who are actually doing that. But what we do know is that at these key levels, at these key highs, these key lows, there's going to be lots of stop loss orders. Now, their stop loss orders are going to force them into the position, whether they like it or not, right? Ideally, whoever's losing in this position, they don't want to be taken out, right? They don't want to be taken out. And their stop loss orders are going to force them to buy it back, right? So if you're smart money, if you bought price down here, you want to sell, right? You've got billions of dollars worth of gold that you bought down here. You want to get out of your position. Right? Now, if you're shorting gold, you want price to keep dropping. But if price comes up and hits your stop loss like this, right? What are you going to be forced to do? You're going to be forced to buy price, right? If you sold on it, you're going to have to buy it to get your position back. Right? Hope that makes sense, right? So when price comes up, smart money who bought down here, they need to sell. Remember, if you've got billions of dollars worth of gold, they want to get out of their position. They can't just sell here, hope that they can get lucky. They know at this area here, there's lots of stop loss orders. There's so much money, right? There's billions of dollars worth of money at these highs. They can get in and out of their position there, right? That's all liquidity is. Liquidity really is how easy it is to get in and out of a position. Now, liquidity doesn't matter for me, like, right? So, my trade, my stop loss like a few $1,000s. Nothing important, right? Not in the grand scheme of things. If you're a massive bank though, you can only get in at key highs and key lows where there's so much money. And so that right there is why liquidity is so important. Right? It's the most important thing, and it's the only reason the markets move. We have no idea why price is actually going to, we have no idea why smart money is buying and selling. And anyone who says they do are they're lying. They're absolutely lying to you. I have no idea why Goldman Sachs wants to buy or sell gold. I have no idea why they would want to do it. Right? Goldman Sachs could be buying gold hoping to trade it for a month, right? Whereas JP Morgan could be looking to short gold at all-time highs, hoping to hold on to it for 20 years as part of their pension fund, right? We have no idea why they're buying and selling. But what we do know is that these big elephants, essentially, they could only get into their positions at key highs and key lows where there's so much stop loss orders, where there's so much money, so much liquidity. That's the only way they can get into that position, right? This is why liquidity works, because it's rooted in real principles, real, logic. So why am I telling you all this? Because this gives us a direction of the market. If we're on price action at this point here, right, we know that price is going to come up and take out these orders. It's going to smash right through these highs, right? Because when it smashes through these highs, all the stop loss orders around here and here, all these stop loss orders are going to get triggered. And then those who were shorting are going to be forced to buy price back up, right? Price is going to keep going up and up and up. That right there is why all financial markets move. Just for liquidity, just to allow the big institutions, banks, hedge funds, even central banks to get into that position and get out of that position. That is it, right? It is not designed for me and you, right? It was not designed for me and you. It is not designed at all for retail traders. It's designed for those who have billions of dollars, right? So that is the only reason price moves. It moves for liquidity. Okay, so now that we know that price is going to come for these stop loss orders, what does that really mean? What does that really mean? It means we can get onto the lower time frames and look for any entry, right? So, even if you use an indicator, use VWAP, use volume profile, even depth of market, as long as we're bullish, right? As long as we're buying price, targeting these highs, we will be fine, right? As long as we trade in that direction, we will be fine. And the entry pattern is the least important thing. But let's go to the 5-minute chart and let's just look for some simple entries. Okay, so here we are on the 5-minute chart. And like I said, the entry pattern is the least important thing. We've done 90% of the work on the higher time frame. We know we're bullish and we're just going to look for any sort of entry. Now, I'm not going to teach you any sophisticated sort of entry because there's loads of videos on the channel that you guys can check out. But for me, and I'll show you my literal trading model that I use, it's giving me financial freedom. All I use is a Fibonacci retracement. So you see this low here, right from the low to the high, and then I buy the dip. Now the only reason this works is because I know I'm bullish on the higher time frame. That's the only reason this works, right? The Fibonacci does not move price. There's no magical level at the 0.705 level. There's no magic to the Fibonacci. It's just I know that we're bullish, right? And if we just zoom out, let me just remove the Fibonacci. Here's that liquidity on the daily chart, right? That key liquidity that we've been studying. Now, we don't have to target this liquidity. A lot of people get this confused. We don't have to just hold on all day, hold on for multiple days targeting this high. We don't need to. You can if you want to. But for me, I always just aim for a 3-to-1. So what I do, Fibonacci from the low to the high, like this. I enter the 0.705 level, like that. Put my stop loss at the low. And then me personally, I always target a 3 risk to reward ratio. Just like that, right? Just like that. Nice and easy. I mean, trading can be easy, right? I mean, look how easy that was. I know maybe if that's the first time you've seen liquidity on the higher time frames, obviously that might be a bit more difficult for you, but with practice, this works. I'm telling you, this actually works. Every profitable trader I know is using liquidity. Right? Everyone uses liquidity. That is how people actually make money in trading. So yeah, I mean, the entry pattern is the least important thing. You can have any sort of, RSI, moving average, anything. As long as you're trading in the direction, the higher time frame direction of liquidity, you'll be a profitable trader. You will be a profitable trader. And it's really that simple. This is what changed my trading completely. I went from having no idea where price was going to go, mainly because so many of these gurus you just say, I don't know if you guys have heard it, where it's like, oh, your job as a trader isn't to predict price. It isn't to predict where price is going to go. I don't know. I'm sorry, bro. That's exactly what your job is as a trader. It's to predict price with probability, not certainty, right? No one knows for sure where price is going to go, but you need to have at least a direction. You don't have a direction and you have no idea where price is going to go and you're trading. You're not trading, you're gambling. And that might sound harsh and stuff, but these gurus, bro, they added years of misery and pain that I could have easily avoided because they were telling me, oh, you shouldn't be predicting price. You shouldn't be predicting price. You shouldn't have a direct. Like, what are they talking about? You're supposed to have a direction for the market. And then once you got your direction, founded on liquidity, right? Liquidity, real logic, right? I spent about 5 minutes explaining to you why liquidity works. Because, smart money, they need to get into their positions because they've got billions of dollars. Liquidity is rooted on real principles. Real principles at work. Isn't some random indicator that says, oh, the last 20 candles on a 5-minute chart is going to predict price. It's none of that. It's based on liquidity. Real concepts on real principles that actually work. So there we go. Bit of a tangent there. Entry pan, least important thing. There's multiple entries here, but I'm not going to talk about it. I just gave you a very simple one that I use. And yeah, that is literally all you need to be a profitable trader. And that was just a high-level overview of liquidity and trading in general. You guys, if you want to be profitable, you need to watch this full, completely free trading course I made. It's 3.5 hours long. It's probably, it is the best video I made on my channel. And it will teach you everything you need to know, beginning to end, on how to become a profitable trader, completely for free. And it should be on the screen somewhere, and it will be in the pinned comment down below. And if you literally click my profile, Atif Hussain, the first video, not the featured video, it should be that course. So make sure you watch that course. Don't skip around, right? I know it's very tempting. I know it's a long video, but take breaks. Get your notepad and pen, because 3.5 hours to make you a profitable trader is a very, very good deal. So check that video out. But before you do that, make sure you like and subscribe, because I don't want to lose you guys in the algorithm, bro. I don't want to lose you guys in the algorithm. Make sure you subscribe, man. But yeah, go check out that free trading course. It should be linked all over my channel. But yeah, I'll see you guys next video. Peace.